Morning, Steve Fried in Chicago with the morning grain counts. We have markets higher overnight, beans and wheat leading the way with corn following. Meal and oil also higher. Yesterday we saw some speculative buying in the beans, talk about China short and needs to buy some U.S. beans. India bought some U.S. soybean oil. And technically we traded above the 50-day moving average and above the trend line that we've established downward since the June highs. $13 is key resistance. That's where the 100 and 200-day moving average is. A trade over that would be supportive. We also saw some inflation buying in the beans that helped rally the market yesterday. Corn was a follower. Again, corn is trying to figure out what our export demand is going to be. The ethanol production suggests USDA is at least 100 million bushels too low in their corn usage numbers. And South American weather with Argentina turning drier. We also note that Ukraine crop is bigger, their exports could be bigger, and Argentina increased their export licenses from 38 to 42 million tons. The issue in Ukraine is their logistics and what happens as the tension increases between Russia and Ukraine to Ukraine exports. We also noted that the wheat market rallied yesterday, coming off some sell-off because of concern about a Canada rail stoppage, and that wheat might come into the United States. Right now, though, we are rallying after Egypt bought their wheat, one cargo, $7 a ton higher than their previous buy, and that includes a $4 to $5 a ton drop in freight. The world wheat buyers are short. They're going hand to mouth, buying only in November and December. So a higher Russian export tax, higher prices, and the fact that they're short could move wheat prices higher. As far as weather is concerned, U.S. is dry. Europe and most of the Black Sea is dry, although Russia and Ukraine could see some showers over the weekend. Argentina is turning drier, where Brazil weather is perfect. And Eastern Australia is going to get some more rain, adding to concern about the quality of their wheat. Our weather guy is going to be giving a speech today, and he's going to be talking to North Dakota farmers about how negative PDO and La Nina could actually dry things out for them after a good spring start. We also, next summer, he's going to put a ridge in Nebraska, Kansas, parts of Iowa and Missouri, and extend that ridge to the east of the Mississippi River and to the south. Again, negative PDO, La Nina, could actually amplify that ridge into the northern plains. We'll also be watching pretty closely some dryness in the southeast. A ridge there could amplify into the west, similar to 1988. So we have a lot of weather to trade both in South America, the Black Sea, and also the U.S. This spring and summer down the road. So I think that we'll have to be watching the money flow, especially with the inflation talk, and just see if we can trade over that $13 area, get closer to $6 in D's corn, and trade over the $8.50, $8.55 area in nearby December wheat. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like yourself would like to be treated.